I'm optimistic that the price of metal has an upward bias. I don't know how high it's going to go. I've experienced several gold metal cycle markets over the years. It feels like we're two-thirds of the way through this one, and there's probably a euphoric blow-off coming.
Please join us for our next live stream Sunday, August 15th at 9 p.m. Eastern. We'll go over current events, past guests, and of course, gold and silver news. Once again, our next live stream will be Sunday, August 15th, 9 p.m. Eastern. See you then.
Hello again, everyone, and welcome to another edition of Silver Bullion Television SBTV. I'm your host, Stephen T. And on today's show, our guest is Douglas J. Hurst. He's the chairman of Northern Vertex Mining Corporation and was formerly the head of Northern Empire and Eclipse Gold Mining. He is a business pioneer in the precious metals royalty streaming arena, where he has closed mining exits on companies he founded and sold at over $2 billion in value. And he has close to 40 years of experience in the mining industry, as well as being formerly a mining analyst at Sprott Securities back in the 1990s. He's also, interestingly, a qualified geologist, amongst other things. Douglas, welcome back to SBTV. Actually, welcome to SBTV for the first time. And how are you enjoying the heat wave up in Canada?
It is a bit hot, and it's kind of smoky too. So thanks so much, Steve. It's a pleasure to be with you.
Now, it's rare that we have the insight of an actual mining analyst and geologist who is also a macro investor and a business titan in the industry. So as a first-time guest on the show, welcome, Doug. We want our viewers to get to know you a little bit better. So you graduated from McMaster University with a Bachelor of Science in Geology back in the early 80s. But back then, why did you choose to become a geologist, Doug? I mean, was it the love of the great outdoors, the Klondike and the Yukon, Whistler Mountain? What started your love for rocks?
Well, Steve, it was a mix of things. I wasn't great at math, but I loved sciences, and I really enjoyed being outdoors and geography. And geology is geology is almost like a general science degree. There's a little bit of biology, there's a little bit of physics, lots of chemistry, and not too much math, so that was good. And I really enjoyed the outdoors. So as a kid, I went to camp and I went on canoe trips, and I really enjoyed the outdoors in Ontario. Yeah.
Well, that's fantastic. And it sounds like you're really, really outdoorsy. And on that note, here's another geological question for you, Doug. Is it true that platinum, the metal, is more abundant in the Earth's crust than gold? And I know you might freak out because it sounds like a quiz, but it's really not. But our question is, are mines usually built for gold due to the greater concentration of gold deposits compared to platinum?
Yeah, platinum is a really interesting element. The metal only occurs in abundance where it's high enough grade that you can actually mine it, only in a very limited number of places. I mean, there's a few places in Canada you can do it. The Sudbury nickel deposits come to mind. The Bushveld complex in South Africa is a huge resource of platinum. And there's a few other places, adjacent to South Africa that have platinum. And then Norilsk in Russia. It does occur in other places, and it tends to occur with nickel deposits. And nickel deposits tend to be sourced from incredibly deep rocks that come to the surface and form these intrusive complexes. So platinum is a really interesting element, but it doesn't occur everywhere. Whereas gold tends to occur. You're right; it's less abundant, but it occurs in more places around the planet, and so it's more prevalent that there's more gold mining than there is platinum.
Now, it's interesting that you mentioned nickel there, because we were speaking to Anthony Milewski a few weeks ago, and he was talking about Norilsk and other companies like that in the mining space. And I want to ask you later today about silver as a byproduct that's found in some mines when we get to discussing royalty streams very shortly. But just staying on gold mining for a minute, at which stage, Doug, does the work of a geologist actually begin?
It's the very, very early stages. Other than prospectors who are sort of out there just banging on the rocks trying to find metal, Geologists are involved from the very, very early stages right through to mining. And so a geologist almost acts like a prospector. So a really good field geologist also has the skills of a prospector. Just that inquisitive edge that's always looking for, banging off rocks and taking samples and taking as many samples as they possibly can. There's some really funny axioms in the mining industry, and one of them is that if you set up your tent, take a sample. Take a sample of the rocks that you're camping on, because you don't know. You just never know where gold occurs. So you think of a couple of very large discoveries in Canada, and the Trans-Canada Highway went directly over top of the Hemlo deposit. So the Trans-Canada Highway is Canada's main highway that links all the provinces from west to east. And through Northern Ontario, the Trans-Canada Highway went straight across the top of the Hemlo deposit. Okay, there were outcrops on the side of the road where there was gold occurrences, and so Hemlo was discovered in the early 80s, and they're pushing 35 million ounces plus, and everybody missed it. So you fast forward almost 40 years now, and Newfound Gold has been finding the very high grade numbers in Newfoundland, and you know what? The Trans-Canada Highway goes straight across the top of it. So go figure, right?
It's interesting that you mentioned Hemlo, because we're going to get to that very shortly, because we've been hearing about you and Doug Silver and how Hemlo was an important part of how you all began.
Absolutely. Well, it goes way back further than that. Absolutely.
And we really want to get to that, but very quickly, we've all seen films about gold miners in the Old West, films like The Treasure of the Sierra Madre with Humphrey Bogart, or accounts of pans used in the gold rushes from those old days. And bringing it to the basics for our audiences to really understand the processes here. Just exactly how are gold deposits even discovered, Doug? I mean, it sounds like such a basic question, but where does it actually begin?
It's a lot of bootlegger. So you mentioned Hemlo. So my very, very first summer, I was a summer student, and I worked for a guy named Don McKinnon, or worked in and around him that very first summer that I worked, which was the summer of 82, 83. And Don was a prospector. And so, so he had, now, the interesting thing about Don is that he was more of an information prospector than he was a boots on the ground kind of prospector. He certainly spent a lot of time in the field, but he was an information hog. So long before I ever had a laptop or any sort of a personal computer, Don had a giant basement full of dusty maps, and so he was an information prospector. So the very first summer that I spent in the field was working with Don McKinnon, and this was just a year or two after the discovery had been made at Hemlo. So I was a little peon right in the mix of things as Hemlo was happening.
It's interesting that you mentioned that, because you were saying in one of your recent interviews, even as you've come all that way from the early 80s, that mining always bears that binary outcome, especially in exploration play projects, where you are always faced, as you were saying, with the risk of either having something or you don't. And here's the question, Doug. Is it possible that even after several promising initial drill results that showed a good grade of gold in the ground and the drill core, that a discovery can later turn out way down the line to be inverted commas, a dud, for lack of a better word? And how real are such risks?
Oh, the risks are very real. And the corollary is true too, right? More often than not, a discovery is made after 50 or 100 drill holes. It takes a long, long time to sometimes figure it out. Sometimes the first hole is the best hole. So Hemlo is a really good example. they drilled over 100 drill holes before they actually hit the ore body that they were mining. Another big discovery in British Columbia is called Eskay Creek. It's a very famous high-grade ore body. They really didn't tag into the ore body until well after 100 holes as well. So it took a long time. And yet, every now and then, you'll see a mining company hit a great hole. They drill a whole bunch of holes around it and nothing. So ore is where you find it, not where you think it is, right?
Because we were looking at the Northern Vertex Mining Corporation website, and your teams have always had a strong key focus on shareholder value. I know that's close to your heart, Doug, because part of what your teams always do over the years is you specialize in unearthing these great finds and presenting them as value adds. And of course, at the same time, you flip it on for millions and make more money with your pen than your drill bit. But now, for some of our audience not familiar with the mining jargon, you also announced various drill results for gold from 1.98 grams per ton or marked G/T to 2.28 grams per ton or G/T grams per ton. What is a good grade of gold when you look at a drill core, Doug? What is considered to be a good drill result?
Well, so if you take a half a step back and see what kind of a mine it could be, the kind of processing that it would be, so how expensive is it to mine and extract the metal? So something like Fosterville is a good example. So Fosterville is this very high grade find in Australia. It is an underground mine, so that's more expensive. You have to excavate tunnels underground to extract the ore, so that's expensive. The ore it's called double refractory, so it's very difficult to extract the gold from it. And so in order to make money, you need much higher grades. So you need 5, 6, 7 grams in order to make enough money to compensate for the cost of extracting the ore and gold. Now, something like Northern Vertex is an open pit heap leach mine, and so the costs of mining and extracting the gold are dramatically lower. So Fosterville's, an underground mine, you're looking at 5, 6, 7 gram type material you want to be mining, whereas Northern Vertex can make good money at 0.5 grams. So an order of magnitude lower grade. So in Northern Vertex's case, if you can get drill intercepts of 10, 15, 20, 30 meters of better than 0.4 grams, 0.5 grams, then you can make good money at it, and those are good drill intercepts. So if you're getting 20 or 30 meters of a gram at Northern Vertex, that's double what the mine grade is right now. Whereas at Fosterville, 20 meters of a half a gram, they would never mine that, right? So,
because we just want to share your company Northern Vertex's infographic here for a short moment, and you can see it here. Your open pit heap leach mine, and now we understand that Northern Vertex, and I'm just pulling it up here on the screen, that Northern Vertex is born out of your latest venture from merging your last company, Eclipse Mining, with them, and that this just took place over the past year. So your old asset, Eclipse's Hercules, is up north in Nevada, and this is actually in southern Nevada, northern Arizona.
Northern Arizona, exactly. That's exactly right.
So it's a great mining jurisdiction. Our question is, would a mine such as the Moss Mine, as we can see here, with all these veins, the vein system, Ruth system, is this considered a major gold discovery today?
Well, so overall, the district is a very big gold district. So the Oatman district, this is where we're working. It's called the Oatman district. The Moss Mine is north and a little west of the Oatman mine, and they mined 2 million ounces at the Oatman, and it was very high grade, and it was underground. And so, as is typically the case, as a gold mining district matures, They mine the very high grade stuff at first, and over time, they start looking at the open pit potential, so larger, lower grades, and once they build bigger mills, they bring in bigger equipment. You can start to mine lower and lower and lower grade. All mining districts go through this, right? So when you look at, let's say, the Timmins district or some of the Rouyn-Noranda districts, early grades were 10, 15, 20 gram material, and it was all underground. And now you look at, Rouyn-Noranda, the Malartic mine, they're mining a gram, and it's a huge open pit. And in Timmins, they eventually put all of the underground workings together, and they're mining. They have huge open pits there, and they're mining a gram. Hemlo is a really good example. Some of the early days, they were mining 10, 15 gram material underground. And now when you drive by the mining complex, there are enormous open pits where they're running material that's about a gram through the mills. So that's a typical evolution of a mining district. So the Oatman, when they mined the early days of the Oatman, it was 15, 20 gram material that they were mining. And now Moss is an open pit heap leach, and they're mining a half gram material. So it's an order of magnitude lower grade, and that's just a typical evolution of a mining district.
And for that matter, Doug, are large gold discoveries even still common today?
No, they're not as common now. But technology has got to the point where what used to be grades that you could never mine and make money at, you can mine and make money at now. And part of that is the evolution of the technology, the mechanics of mining gold, and the way that they extract it. And that's a very typical evolution.
Because our team's senior presenter, Patrick, spoke with a guest previously who worked with the U.S. Treasury and Bureau of Engraving and Printing. And I know this comes out of left field, but this guest was saying it takes about 1 week, for the Bureau to print 10,000 sheets of Federal Reserve notes. The whole process from printing to allowing the ink to cure, 1 week. Comparatively to Federal Reserve notes, It takes a lot. It takes a lot longer to mine gold discovered in the ground to actual production, doesn't it, Doug?
Yeah. Well, and one is paper, and one is a hard asset. So that's very interesting. Well, that's fascinating, Steve. That's a really interesting analogy.
Now, how long does it take to mine gold in the ground to actual production? I mean, just out of curiosity.
Well, it does depend. So something like Northern Vertex, it takes a while. When you mine the gold, you stack the ore, you leach it. The whole cycle takes a month, 6 weeks sometimes, for fluids to percolate through to extract the gold, and then you're pouring gold bars. So there are other operations where they will mine it. They'll create what's called a concentrate. And then they'll sell the concentrate to a smelter, and then it takes a while for payment to happen. So it's typically a month or 6 weeks. It takes a while sometimes.
Because I suppose you can see.
So it's not a week. It's not a week. We don't have to wait for the ink to dry. That's brilliant. I love that.
That's brilliant. Because I suppose you can see what we're getting at. Would you say we can surmise that one of the reasons why gold's monetary metal status has been established for millennia is that, unlike printing presses that go brr, the speed of money printing of notes far outstrips what is produced in gold mining, and it's a huge part of why gold is valuable and hedges inflation, fights loss of purchasing power, and so on, isn't it, Doug?
Yep. Well, and I mean, if your house burns down, all of your cash disappears, but your gold is still there. It might be in a different form, a bit of a puddle, but it's still there. So it's a hard asset. That is true.
Turning to your macro outlook on the gold mining sector now, Doug, are we early in a new bull market, as we are seeing with the commodities boom, or are valuations sort of still low? There's lots of chatter about mining stocks in a sense. How would you describe the opportunities in the gold mining sector right now?
Well, it's very interesting. So there's a couple of things here, and one of them is that I've always been a terrible gold prognosticator, and uh, and I don't expect the world to burn down. And I'm not prognosticating 15,000 or $20,000 gold. It might get there, but I don't know, right? And so, I'll get to the macro question in a few minutes. But when we are deal making, or whenever I've been part of a deal making process, um, we look at where we are in the cycle, and where you are in the cycle is usually it's predicated by how difficult it is to raise capital, right? So the tougher it is to raise capital, probably from a deal perspective, the better it is, right? And Newmarket, when we ended up buying Crocodile Gold, which had the Fosterville mine, was a very difficult process to raise capital. So that was in July of 2015. And I think that month, the price of gold went down $10 a day for, I don't know, weeks when we were on the road show. And so my partners were doing the road show and trying to raise capital. All we had to do was raise $25 million, and that was enough for us to get control of Crocodile Gold. Well, you know what? I mean, with the board that we had, it was Doug Forster, it was Blaine Johnson, it was Lucas Lundin, Randall Oliphant, Ray Threlkeld, all superstars in their own right. Wonderful, wonderful people to work with. All we could get orders for was 15 of the $25 million. So Doug Forster was the CEO. So he turned around to all the directors and said, guys, we're all writing checks because we got to get this deal across the line. Lucas, bless his heart, wrote the biggest check, but we all wrote bigger checks than we had expected to. And that is typically the signal of the bottom of the market, when an all-star board can only get orders for only just enough to just complete the financing. So, so the 2 or 3 deals that I've been involved in the last 5 or 6 years, capital has not been easy to raise, and capital right now is not easy to raise. So in my deal making, or in the deal making that I've done with groups, we set deals up based on whatever the current price of gold is, plus a bit of a buffer margin. So we don't prognosticate that the price of gold is going to be 2,000, 2,500, 3,000. We look at the current price of metal. We look at the possibility that the price of metal could drop. And will this business idea work? And can we increase the value of these assets in the current environment? And if the environment changes to the positive, then we're thrilled. And if it changes to the negative, then we have that safety buffer. So where do I think we are in the current the metal markets? It feels like we're sort of inning 5, inning 4, 5, 6, somewhere in there. We've certainly had that initial run up from July of 2015, which was at 1080 for gold, to almost $2,000, and then there's been a typical pullback, and we're getting close to the bottom. We have sort of come off the bottom of that pullback, and we're kind of fuddling through. So I'm optimistic that the price of metal has an upward bias. I don't know how high it's going to go, and we're not in the late innings yet. I think we're still sort of in the, we're 2/3 of the way through the process, and at some point, and I've experienced several gold, or metal cycle markets over the years. It feels like we're 2/3 of the way through this one, and there's probably a euphoric blow-off coming. So when I look at the current valuations of gold companies relative to the gold price, they are very low. They are very low relative to the gold price. So, in order for Northern Vertex to work, we don't need much more than $2,000. The idea will work very well at these price levels. And if we get a bump in the gold price, it'll work even better than we'd hoped.
Great, because I was actually appreciating all the references to the innings and all that, because I was thinking you were more along the lines of an NHL fan. Are you going for the Maple Leafs, are you?
No.
Sorry, you're out in Nelson, aren't you? I mean, is that a BC team?
No. Yeah. I'm a fair weather fan. You know, when the Canucks
Canucks, right,
get well on into the playoffs, I jump on the bandwagon. And when the Leafs get well into the playoffs, then I jump on the bandwagon.
Because Trevor Linden and Pavel Bure and all those Canucks and all those guys, you know. Because Doug, I do want to get back to Australia for a moment, because I do, and not just for the cricket references and then the innings and all that, but because you did mention your team earlier on and how they were a big part of what you did there, and I want to get back to that shortly, because we want to discuss Kirkland Lake and what happened at Fosterville and your success there. But very quickly, I just want to switch gears now and discuss precious metals royalty streams for a moment. Because McKinsey's metals and mining practice, McKinsey, the consulting firm, they have a report from late April this year in which McKinsey make the case, and I quote, I'm just reading here, renewed growth sentiment among miners' management teams, combined with the rise of streaming and royalty financing over the past decade, suggests that this particular type of alternative financing could be set for significant expansion over the next decade ahead, end quote. Doug, McKinsey are saying that this expansion is projected, but you must look at all this and go, this is not new. You've already seen the potential all those years ago. It's what we're seeing with everyone jumping into royalties of late, part of a fad or a spillover from the commodities boom? Or is it something a little bit more significant, as McKinsey seemed to be suggesting?
Well, that's a really interesting question. So, there have been two significant royalty business cycles. And one of them started with Franco in Europe, Pierre Lassonde and Seymour Schulich pulling together Franco-Nevada and Euro-Nevada in the 90s. And there were 4 or 5 other royalty companies which sort of latched onto that business idea at that time. And it was Repadre Capital and Royal Gold, and there were a few other little ones. And so they were all public companies that were royalty companies. Now, they didn't do streaming. All they did was they bought existing royalties, right? And they created a few royalties, but they didn't do any streaming really. And then the business sort of pulled apart. Euro and Franco merged, and then Franco became part of Newmont. Repadre disappeared, became part of IAM Gold. And then Royal Gold just kind of quietly faded. They still existed. So by the end of the 1990s, there were no publicly traded royalty companies in Canada, none. Okay, and so my business partner in creating international royalty was Doug Silver. Doug generated the idea, very smart guy, and he and I met at various conferences, and we threw a whole bunch of business ideas together and figured, we wanted to go into business together, or at least I was going to be part of a board of one of his ideas. And he called me up one day and he said, you know what? There are no public companies in the royalty space. We need to start a royalty company. And I said, okay, well, of course, I'll be a director. That's great. And I put the phone down and I let it sit for 30 seconds. And then I picked the phone up and I said, Doug, this is the idea. I can raise the capital and I know of a couple of places where I can find royalties. Let's go. Right. So that was in 2003. In 2004, we did a handshake, or I guess it was the spring of 2004. We did a handshake deal with a gentleman that I'd met through Don McKinnon, the whole Hemlo experience, and he had a small portion of a royalty on Hemlo. And the thing was trading. It was it was a I guess it was a 0.25% at Hemlo, NSR, 0.25%, and it was cash flowing $400,000 or $500,000 a year, and we bought it for $3.5 million. So it was about 5 times cash flow that we bought this thing. You think about the valuation today, and it's 12 or 13 times cash flow. It was just a crazy number, right? And with that cash flow, Doug and I flew all over the world, vacuuming up as many royalties as we could find. And in February 2005, we listed International Royalty Corporation. And we weren't smarter or better than anybody else. We had first mover status. We were the first guys in the game since the late 90s, when Franco and Euro had disappeared from the market. So when we did deals, we had no competition, and we were doing a royalty company at the 30-year low in metal prices. Gold was under $300 an ounce. Copper was 90 cents a pound. Zinc was 25 cents. Lead was 25 cents. Nickel was at $3, right? So, there was no negotiation. People thought they were scalping us, and we just said, great, that's the price, we'll take it. And because we knew we were at that 30-year low, and we knew that metal prices would skate us on side. So we weren't smarter, we just had a better sense of what so you fast forward, so that was really the thin edge of the wedge that created the whole royalty thing. Then, within 6 months of us listing, Silver Wheaton, Gold Wheaton, Royal Gold revived, re-energized. Franco came back to the market. So Newmont spun the royalty portfolio back into the market. And within a year, there were 5 or 6 royalty companies. And how many are there now? I mean, every dog and his brother has a royalty company in his back. So we weren't better or smarter than anybody. We had first mover status. Now the difference between this royalty business cycle and the one that happened in the 1990s is that this time around, royalty companies are creating royalties, and they're creating streaming royalties, metal streams, which generate much more revenue for the royalty companies. And so based on that, the market caps of these companies is dramatically bigger. So even the mid caps are $1 billion, $1.5 billion, and the big boys are $5, $6, $7 billion. International Royalty, was one of the big ones, and we were an $800 million market cap.
Because so just to simplify it for some of our, sorry to interrupt you there, Doug.
Oh, no.
Just to simplify it for some of our audience members who may be wanting to know a bit about the basics regarding royalty agreements and streaming, I do think we need to distinguish between the two, isn't it? I mean, metal streaming and royalty contracts are transactions under which mining companies sell future production or revenues in return for an upfront cash payment, or in the mine's case, to obtain market capital or non-dilutive capital and financing to proceed. But there are some distinct differences between the two types. And I've got a graphic here from the Visual Capitalist website, which I find helpful, and we're going to seek your help in understanding this as well. I'm just going to share this right here. Now, when we look at this graphic here from the Visual Capitalist, you can see here that in this one, they've divided the two. With the royalty agreement here, the mining company pays the royalty holder a percentage.
So the very, very basic difference is that a royalty agreement is a percentage of revenue that is paid to the royalty holder. So it's typically 1 or 2%, and that's it. That's the calculation. Gross revenue times 1% is what the royalty is paid. Whereas a streaming agreement functions sort of like a loan. But the trailing aspects of it sort of become like a royalty. So typically a streaming agreement will be, you're right, they will deliver metal at a certain price. So the mining company does get some revenue from the metal, and then the streaming company takes all the upside.
And in that case, it can go up to 20%, can't it?
Oh, it can be big numbers. Absolutely.
Wow.
Absolutely. And
Because-
then typically a streaming deal is done to raise capital to build, to build out the mine. And then the value of the stream diminishes over time so that it becomes less of a burden on the mining company. Whereas a royalty, a net smelter return, it just stays the same.
So just to clarify, that's not quite the model that Pierre Lassonde and Simon Schulich of Franco-Nevada had set up when they first implemented it, isn't it? I mean, when you guys followed in their footsteps, that wasn't what the model was initially, wasn't it?
That's correct. That's correct. So they bought royalties. That all they did was they bought existing royalties. They did create a few, but there was no streaming deal. So the first group that really jumped into the streaming end was Silver Wheaton. All those guys at Silver and Gold Wheaton, smart guys, and they're the ones that really created that whole streaming model. And Sandstorm came in pretty quickly after that.
Because I've got an article here that says the precious metal streaming business model is often also attributed to Wheaton River, because while seeking to raise funds in 2004 to expand their core business of gold mining, the company conceived the idea of streaming silver byproduct from the San Dimas gold mine in Mexico to a new subsidiary company. Now, was that something that they sort of just, by God's providence, chanced upon, or did they plan that all along?
Oh, they're very smart guys. They're very smart guys, and they just looked at every angle, and when they saw that kind of a metal stream structure, they realized it was gold. So, and they turned it into a silver streaming company.
Right, because I was about to say at the start of the interview, we were saying we were going to talk about streaming silver as a byproduct later, and I'm just curious, streaming silver as a byproduct, how common is that?
Well, so byproduct streaming agreements are fairly common. So typically, if your major metal is so Vertex is a major. The bulk of our revenue comes from gold, and silver. We do get some incremental revenue, but so Vertex was willing to give up a chunk of that silver value in order to enhance the business so that it would maximize our major source of revenue. And so typically you'll see copper companies that have a big porphyry copper, and they'll have small amounts of silver and small amounts of gold that are produced as a byproduct, and they're quite willing to give up the value of that if it enhances their major commodity.
Just a quick aside now to ask a question about the biggest challenge you face in mining gold. A quick question on what are the risks that mining companies and miners have to navigate after a mine has been, say, built already and completed in terms of construction? What's the most significant challenge that you then face? Is it, bureaucratic, like filing 43101s, or Bureau of Land Management stuff and hurdles, permits, jurisdictional issues, price fluctuations, capital expenditures, or has it got to do with maybe even environmental concerns? What's the biggest challenge for you in your experience, Doug, when it comes to gold mining?
So the larger ones, the challenges are technical, because when so something like Barrick, they're looking for an operation that generates 200,000 to 400,000 ounces a year as a minimum, right? And so their challenges are technical and people and jurisdictional and those kinds of things. But for small companies, like Northern Vertex is a one asset company, the challenges are more diffuse. So capital markets, raising capital, making sure that our investors are properly served. Those are they're intangibles. They're very difficult to manage, and many companies really don't manage that aspect of their business very well. They tend to be technical. So engineers love to burn diesel fuel, right? And so engineers want to pour concrete and twist bolts, and geologists want to do geophysical programs and drill as many holes as they can, and they lose sight of the business aspect of the business. So, so more often than not, managers in the smaller companies tend to be very technical, whereas they really should be businessmen.
Now, as a quick aside, the billionaire investor Eric Sprott, who you worked for in the 90s as a mining analyst, he'd owned 17% of Kirkland Lake, and obviously he trusted and respected you to have invested in your company, Newmarket.
Right, right.
And a lot of our viewers obviously support Eric Sprott's Physical Silver Trust and the PSLV movement, the need to have gold backed by physical inventory and all that. Can you tell us a little bit more about your story and friendship with Eric Sprott all those years since the 90s? I'm assuming it's a friendship.
Yeah, I don't know Eric that well. We have an acquaintance. And so I worked with Eric. So I worked in the Vancouver office of Sprott Security. And so I was a mining analyst there for about a little under 2 years. And it was a very, very steep learning curve for me. So I went from a small brokerage firm in Vancouver called McDermott St. Lawrence, where I sort of learned on my own. And I learned the ropes all on my own. And then when I jumped to Sprott Securities was back then a small boutique firm that was really idea driven. And Eric was the head of the company at that time, and he, Eric is a very, very good risk player, right? He understands risk like very few people I know, and so he would swing big for the fences all the time, and every now and then an idea would hit. He would hit the ball over the fence, and it would. He thought he was hitting it over the fence and it would go out of the park. And Newmarket was one of those ideas. So indeed, he did buy 17% of the company. So we recognized that he was a very large shareholder in our company. And we went to Eric and said, okay, we're getting very tired. We would like to sell the company. What shall we do? Do you have we see that you own a big chunk of Kirkland Lake. I can't remember how much they owned of it, 15 or 16% that Eric owned of Kirkland Lake. And we said, well, the easy deal is to merge the two. So based on that, we jumped on a plane, went out, and the merger happened. So Eric is a risk manager extraordinaire, and he when he and he now has enough capital to buy the market, right? So he knows, or he has a strong sense that the price of gold is going to be higher next year than it is this year, and as a consequence, he is buying the market, right? So he puts a lot of money into a lot of groups, and he's an extraordinary investor for sure. I mean, by far the most successful investment that he's had in the last 10 years was Newmarket. Newmarket turning into Kirkland Lake, turning into, $1 billion. And from that, he has dispersed that capital into a whole bunch of different places. So, yeah.
Well, thank you so much for sharing that, Doug, because we want to close by asking you, what are some of your plans for the year ahead? Are you going to go back and do certain other projects? What are your plans for the year ahead?
Well, so I'm on 4 boards right now. So I'm on the board of Calibre Mining, a company called Nucor. So Calibre has operations in Nicaragua, and very, it's really the Newmarket team, very similar to the Newmarket team. A company called Nucor, which has a developing deposit in West Africa in Ghana. I'm on the board of Newfound Gold. So Newfound is this new discovery in Newfoundland. So I'm going back to my roots. I just love the province. I love the people. I have a lot of friends there, and Newfound was a very interesting opportunity to get back into the equivalent of a ground floor of Fosterville type discovery. And then I'm the chairman of Northern Vertex. So nominally, I have 1 foot in retirement, but I'm not doing a very good job at that. So I do some fly fishing. I like to ride my mountain bike and do a little bit of skiing and hiking in the mountains. So that's the personal side. Yeah.
Well, that's great to hear because that's the great outdoors and all that. And you can do that all in Canada. So it's awesome. Now, before we wrap up, Doug, could you let our listeners know more about how they can find your work? Because you're not really on social media, are you?
No, I'm really not. I live in a small town in the middle of nowhere, and it's amazing what you can do from your desk. When you're a 7-hour drive to Calgary and an 8 or a 9-hour drive to Vancouver. So I think probably the best way to get a hold of me would be through Northern Vertex. And that's, our website is northernvertex.com.
Well, thank you, Douglas, for your time today and for coming on the show. It has been an absolute pleasure speaking with you.
Oh, Steve, it was wonderful. Very good conversation. Thank you so much.
That was Douglas J. Hurst, chairman of Northern Vertex Mining. For more information about his work and his views on the mining industry, you can also read his reports at www.northernvertex.com. If you like this video, please hit the like button and subscribe to the SBTV channel to be updated on new content. Do also check out the SBTV podcast on iTunes and Spotify as well.